Hello and welcome everyone to another stock analysis video on my YouTube channel. As some of you may know, I've recently passed 100 subscribers on YouTube. This means so much to me and I can't thank each and every one of you enough. 100 subscribers is a whole lot of people when you think about talking to a room full of 100 people. And to think that that many people will enjoy my content enough to subscribe is fantastic, and I really do appreciate it. With that said, if this is your first time you're finding my channel, or you just haven't subscribed yet, I really encourage you to do so. If you do, you'll get portfolio updates, stock analysis, market news, dividend reports, broker reviews, and so much more in your sub boxes. If you do enjoy this video, please like it and comment down below. I really enjoy communicating and doing my best to answer any questions you guys have. Now let's get into the purpose of this video, which I'm sure you've seen the title, you know is about National Grid PLC. Quickly, before we analyse the stock, I want to get you all up to date on what National Grid is, where they operate, and most importantly, where does the money come from. So they're a British company that operates internationally in both the UK and the USA, among others. They are a gas and electric company that primarily focus on northeastern USA and the United Kingdom. It is listed on the London Stock Exchange with stock ticker NG.L, but also has a secondary listing on the New York Stock Exchange as NGG. So for any US viewers, you can buy this stock without any currency conversions if you wanted to. Now, in the UK, National Grid owns and operates the high voltage transmission network in England and Wales, and since April 2005 also operates the electricity transmission network in Scotland, although this is still owned by Scottish Power and the Scottish and Southern Energy. They part own and operate interconnectors in France and the Netherlands, and they also own and operate the gas transmission network known as the National Transmission System, which provides gas to around 40 power stations and large industrial users, as well as providing to gas distribution networks to then supply to domestic and commercial users. In the USA, they operate over 9,000 miles of electricity transmission infrastructure, and they serve over 3.3 million customers in Massachusetts, New York, and Rhode Island, and over 3.4 million customers with natural gas in the same states. They operate through a large network of subsidiary companies in the US, with some of the largest being the New England Power Company, Massachusetts Electric Company, and Colonial Gas Company. Its regulated US business provided about half of the entire group's profit, which demonstrates its increasingly unreliance on solely the UK market. Hopefully, after that quick analysis, you have an understanding of what the company does, how it makes its money, and where it operates from around the world. So now let's have a look at some numbers. All the figures quoted here are from Yahoo Finance, which I believe to be a trustworthy source. And with National Grid being a utilities company, it is generally expected that they pay a dividend due to stable earnings for the most part, and National Grid do, with some style at that. At 5.47% current yield, it's a very nice reward for shareholders, and what is better is the 46% payout ratio. What this means is that the company and its dividend is very healthy. It also points to the company being well established and a leader in its field, which we know is the case, as in the UK, National Grid is what's known as a natural monopoly. With less than half of its income going to investors, this means that it is investing over 50% of its income into maintaining and growing its business, which for investors long term is very welcome. This healthy dividend has been growing since 1996 with the exception of 2011, which is a blip on their dividend record. The board have also vowed to keep the dividend growing above inflation in the future. They have targeted share price growth of around 5% in the medium term and at least 7% in the near term. The PE ratio is also at a very reasonable level, sitting at around a trailing PE of 8.5, where the profit margin is also very healthy at 22.16. Debt is relatively high at National Grid. However, this is fairly common with utility stocks, as the infrastructure requirements at such a company require frequent large capital outlays. But as earnings are generally so stable, they are able to take on large amounts of debt safely. In the case of National Grid, they have a total debt to equity ratio of 1.29, which does mean they have more debt than equities, which deems it highly leveraged. They do, however, have the means to cover interest payments 3.75 times over, which makes the company a safe investment in the eyes of many, as it is considered financially sound to be able to cover interest payments 3 times over with pre-tax earnings. We've had a look at some of the key figures for National Grid now. It is time to talk about some potential political issues that could have a huge effect on the group's share price. The key talking point is privatisation. Much of this talk comes from Labour leader Jeremy Corbyn, and at the end of March, shares fell around 3.3%. This wiped almost 900 million off of the value of the stock after a report was released of Labour's plan to renationalise the utility, among others, such as breaking up the Royal Bank of Scotland. Now bear in mind, another vote isn't due until 2022. However, with the political turmoil over Brexit, I believe it's very feasible this could be brought forward. There has already been talk of a snap general election. If this was going to happen, Labour has assured shareholders they would be compensated by being issued government bonds, which are okay, as bonds are generally stable. However, they would also be offered to overseas investors. If under market values were offered, overseas investors would be the best covered under the UK Bilateral Investment Treaty, where they're able to bring a disputed valuation to an international tribunal rather than going to the UK courts, and it would be politically problematic to pay UK investors less than international investors. So even if this plan ever came to fruition, it is unlikely that any investor in the UK would be less compensated than an international investor. So I hope this video has given you an idea about National Grid PLC. And if you're interested in purchasing National Grid shares, it is very important that you do your own research before buying and fully understand what you're buying. If you've made it this far in the video, thank you very much. If you haven't subscribed already, please make sure you do that now. Again, thank you for the 100 subscribers. I hope the subscriber who requested this video is enjoying it and it provided the information you needed. Good luck to all of you investing, and I'll see you in the next video. Make sure to check out some of my previous videos where I talk about free trade, show you when I got paid my dividend from the Royal Bank of Scotland, Shell and other companies, and I will see you in the next one. Thanks so much for watching. Comment down below. See you later.